Hello and welcome to a bulletin update for Client for Life. I wanted to get a message out to you because today the government has changed some regulations around borrowing. Essentially, we've seen it before, there's a loading on commercial loans. Commercial properties, self-managed super funds are treated slightly differently to residential properties. But we have enjoyed for about the last 5 to 10 years here in Australia, investment loans aligning themselves with residential loans for residential properties. That was not always the case in Australia, and you know, we all have short memories at times, but I know when I go for a loan in my self-managed super fund, I'm going to be at least 1 to 1.5% above the market. And what the government's done in an attempt to slow down the property surge in Melbourne and Sydney is to put a loading on your investment property. So if you were lucky enough to package your home loan with a couple of investment properties, and if you were lucky enough to be under 5% interest, I'm really sorry to tell you that that's possibly going to change for you. The regulations seem to be that 5% is the standard interest rate for an investment residential property loan, and that you'll be benchmarked on 7.5% for capacity. We've known about the changes since about March. They've been, you know, typical the government, they populate them, they start to send out papers, and then you can sort of feel it hardening, and it was announced at 4 o'clock last night that it's actually going to be the case from today. So what does this mean to my investors who are holding residential investment loans? It means that if you are under 5%, which probably is about half of my investors, you're going to see your loans increase to 5%. What does that mean to your out of pocket? Well, I've done the sums, and it means between $13 and $18 a week extra out of pocket. It's not going to break the average investor, but you need to understand that things have slightly changed. It means that your out of pocket's higher, your tax refund will ironically be slightly higher as well, because we all know it's about bridging the gap. So my advice is, if you want a new PIA, please send me an email, lynne@solidgroup.com.au, and I'll happily redo your PIA so that you've got exactly down to the cent what your out of pockets will be. What do I think this means moving forward? I personally think we've probably got a 12-month to 18-month window with something like this. I've seen a lot of regulations come and go. They sort of put them on. It's a bit like regulating the interest rate. I think this is just a regulation to try and put a little bit of a dampener on what is potentially, in the government's eye, a bit of a runaway property market. I'm unconvinced that it is. I still believe that if you look at the property prices 2006, 7 and 8, and you bench the property market today, they're higher, but we've only just really got over the recovery, and we're now into growth, which we expect growth in a 7 to 10 year period anyway. I think that interest rates will stay firm for a little bit longer. I think the RBA have probably highly optimistic growth figures for next year. They're talking 3.75% inflation by December 2016. I think if we get 2.7, we'll have a nice ongoing rhythmic hold. We're getting about 2 to 2.25 at the moment. I don't see it really overtaking much over 2.7. I also reviewed the figures of Melbourne's population. They've actually been revised in the last month. They were predicting 5 million. They've now adjusted that prediction to 5.9 million will be the population of Victoria by this December. We're growing at 101,000 more people per quarter than Sydney. So we remain the place to be. And I also think with the Australian dollar dropping to where it is, we were having about 120,000 students sort of in the inner city for 2009, 10 and 11, and those figures dropped when our dollar changed. I actually think they dropped down to about 90,000. I think we will see the return of those students as well next year with the dollar firm. People make education plans sort of 6-12 months out. I think that we'll see that change. In terms of other changes, I think money will stay the same. I think that we'll have to see how these changes to the new investment regulations go at 5%. As I said to you, half my clients are on 5.2 at the moment. So if you are concerned, give me a call. I don't think it will affect people who have 1, 2 or 3 investment properties. It's more likely to affect people like me that want to add that extra property, and we've already got over a dozen investments. So anyway, look, call me if there's a concern. I wanted to give you an update. I don't know when your bank will contact you, but I'm sure it will be imminent. Take care and thanks for listening.